All right, welcome back. We've got a quarter one earnings update. We got a lot to talk about. It's going to be a long video. I just recorded this and it was 30 minutes long, so I'm going to redo it and make it shorter. I still recommend you put the speed up to 1.5 or 2 times speed. Before we get into my earnings notes, let's just see where we're at in the market. We had a nice pullback in the NASDAQ. Since then, we've had a nice recovery, about a 7% bounce in the last 20 days. We have seen the volatility collapse. Now, when the VIX is low, it's time to go. When I say that, that does not mean sell everything, wait for the VIX to spike. What I am doing here is I'm limiting my purchases. I'm not doing anything in size, and I'm waiting for the next VIX spike, because when the VIX is high, it's time to buy. When volatility is up, you have people selling things because of fear or because they're forced sellers. I want to be there when your neighbor is selling the house half off. I want to be the one able to put up the cash to buy a house for half price. So I'm waiting for the market to give me quality opportunities. I'm being patient. I have cash ready to roll. But with earnings, you do get some opportunities to pick up some stocks. But do your homework, do your research. And again, if the market corrects 20%, even if a stock just dropped 20% on earnings, it's going to continue to most likely drop if the whole market comes down. Because again, there will be forced sellers or people with fear just getting out of the market as a whole. So that's where we're at. With that being said, let's get into my earnings notes for quarter one. So we've got Apple. We'll start here. Apple was up 5% post earnings. Now, I could put a ton of bullet points for each company. I'm just going to go over a few so we can get through this quick. Apple did announce a $110 billion buyback, the largest in any company's history. Their demand was not bad. So people were expecting a lot of softness when it comes to Apple products. They did miss a little bit on some of their device sales, but it wasn't really that bad. My problem with Apple right now is there's not a lot of innovation. I like the company, but I need to own it at the right price. It's a phenomenal business, it's a phenomenal brand, but they really need to get better at their upgrade cycle. The last 5 years, the iPhone is the same. It's just a different color or a different camera or whatever. We need something else to really draw the consumer to say, I have to buy the new iPhone this year. Otherwise, there's really no big upgrade there. AI will be their saving grace. I'm imagining a world where Apple comes out and says, we've got all these new AI features. If you want it, go buy the new iPhone. We're not going to give it to you in a software update. And they can do that with the iPad, the MacBook, the AirPods, all their products. Make them AI enabled and charge a premium to have people come and upgrade their new stuff. So that's what I expect to come. Another note here on Apple, Warren Buffett is starting to sell. Now, he's not unloading his whole position that we know of, but he is reducing his size to Apple. To me, this is interesting because I believe they have $170 billion in cash, Berkshire does. So he has a ton of cash, and he's saying, I'd rather have more cash than have Apple. So that's interesting. He's not putting his money to work at something else. He just would rather have more cash than have Apple at these prices. So I like Apple under 165. Other than that, I'm not looking to add any more anytime soon. Microsoft, they were flat. Microsoft is a cloud monster, $22 billion in net profit. And Microsoft Azure is around 40% of the revenue. When I get through these notes, we're going to go through some graphics that'll show some of these key points. Will illustrate what I'm saying here. Meta was down 16% on their earnings report. They're spending a lot. They're continuing to spend a lot on their AI build out. That is NVIDIA. They are spending a ton of money on NVIDIA GPUs to help build out their AI language learning model, Llama. I really like what Meta's doing. They're doing open source AI computing. They're allowing developers to come build on their product for free. And I really like that. So I think Meta's doing all the right things here. I really like this company. They get a lot of bad rap for social media. I'm not a fan of social media, but as you'll see, they got a lot of eyeballs on their products and they have a lot of profit. So they had 12.5 billion in net profit this quarter, and this is the number that'll blow your face off. 3.2 billion daily active users. 3.2 billion eyeballs, people using their products on a daily basis. That's like half of the population is using a Meta product. Phenomenal, phenomenal. They're going to continue to monetize their audience and continue to have record profits. Meta did announce a dividend last quarter, so that's good news. Google is the red-headed stepchild. No one likes Google except for me. I like Google. I like YouTube. How are you watching this? Google. Google, they were up 12% and at an all-time high post earnings. They announced a dividend, 23 billion, almost 24 billion in net profit, and the cloud keeps chugging along. So their cloud growth is nice and steady and just keeps moving up. I really like what they're doing. They had a blip when it came to the rollout of their AI product. Google has a lot of fat. They're going to continue to trim the fat. They have obviously a ton of profit that they're able to reinvest in whatever the hell they want. I like what they're doing. They get a bad rap, but phenomenal business. I don't think it's going to go anywhere anytime soon. We'll talk about more of their business model down the road here at the bottom of the video. Amazon, $10 billion in net profit. That is great. Amazon has been an unprofitable company for a very long time, and now they are focusing on profitability, and they're doing a great job of it, and this is just the beginning. Just the beginning. The advertising is now their fastest growing segment of the business. Amazon Web Services, record revenue of $25 billion. That is the largest cloud business out there. $25 billion for Amazon, $24.5 billion for Microsoft. So Microsoft is catching up. But these guys, there's plenty of room for both of these companies to eat, as well as Google Cloud. Palantir was down 20% after earnings. Now, some of these companies that had big drop-offs after earnings, a lot of it was the stock price was too high going into earnings. So the market kind of pushed the stock price up. Earnings came out, it was okay, it wasn't terrible, sell it off. That is what I see with a lot of these, because Palantir had a great quarter, in my opinion. Palantir is a controversial company. It's a hard to understand company. It's a big black box. But I like the business. I like the company. They have two sides, government and commercial. So they can kind of work in either environment. In a growth environment, they can really double down on the commercial. And in a recessionary or a harder environment, they can lean on their government revenue. So they added 59 new clients. The revenue was up around 4% quarter over quarter. And the commercial is growing faster than their government business. Palantir is an expensive stock. To buy it at these prices, you have to expect its revenue to grow around 40% on a 5-year average basis. So over 5 years, it's got to grow around 40% revenue. So great balance sheet. I really like what they're doing. AI, Palantir is AI before AI was AI. So they know what they're doing when it comes to how to use data analytics and make companies more efficient. I think they're going to continue to do really, really well. I did purchase Palantir again. This was the one that got away from me. I had a huge position in Palantir. My second largest position behind Tesla at $7. I sold it all at 12 and 13 thinking I was a genius because it went up too fast. I bought it at 7 and a few weeks later it was at 12 and 13. I said, thank you, hit the register, and now it's $20. So that would have been a nice one to hold on. I'm scaling back in. I am buying very light. These few purchases that I've made have been very light. I did buy some Palantir. I did buy some Google. I did make those purchases today. Shopify was down 20%. They missed guidance. The big problem here is they swung back to an unprofitable quarter. They said it was due to investment losses. The rest of the quarter looked pretty good. I really like Shopify. I love the team over there. I picked up my first starter position in Shopify today. Again, very small, light purchase. I'm waiting for better opportunities, but I wanted to add some here on the weakness, and I would like to purchase some more, low 50s or below. So I'm going to listen to their conference call, do a little bit more research, but I wanted some skin in the game to see what was going on here. Uber was down 9%, slight miss, soft guidance. It wasn't a bad quarter. Uber and Airbnb, a lot of these companies, that kind of Starbucks got killed. But again, I think some of these companies, they ran up into earnings, and it just looks like the consumer's getting a little soft. Now, they're being very picky on what they're purchasing. I do like Uber, but I think, as we'll talk about down the road, the consumer's continuing to travel and do a lot of things, but they're saying, I'm going to travel, but I'm not going to Uber. I'm going to bring my own car, or I'm going to travel, but I'm not going to go eat out as much. I'm going to cook in my Airbnb versus going and eating out on top of the Uber and the travel, all that. So with that being said, I've got a few charts here that we're going to get, just some visual charts. Tesla versus BYD deliveries. You can see Tesla was leading the way, and BYD took the lead, and now they are both dramatic drops, but Tesla regained the lead this last quarter. So again, it's not just a Tesla story, it's an automotive, and it's an EV, it's a worldwide softness in demand. We've seen dips before, and then the trend resumes. That is what we're hoping for when it comes to these companies. Here's the big dog, Meta. Daily active users. I'd like to zoom in, but if I zoom in, it gets off-centered. So let me try something here. Let's go to 225. That's better. Okay. Daily active users, 3.24 billion daily active users. Phenomenal. And again, the trend is your friend here. Where do you think we're going here? We're going higher. Snapchat, daily active users. Crazy. Snapchat is still a money losing business somehow. I really don't understand them, but they do have a lot of users. Sorry, someone's at my front door here. Go away, making a video. Follow, subscribe, UPS man. All right, Microsoft revenue breakdown. Here you can see the cloud, 40% of their business, and then you've got their office products, and then everything else. So Microsoft killing the game, but again, 80-20 rule. 80% of the revenue comes from 20% of their business. Only two parts of their business make almost 80% of their profits. Advertising revenue, you've got Google in the black, you've got YouTube in the red, and then you've got Meta in the blue. So Google is still the big dog when it comes to advertising, and this is for obviously Google search. So when you type in Google search, restaurants in my area, someone is paying to populate, this restaurant near you at the top. Now, I was surprised when I saw this, how little growth there is when it comes to YouTube. But I think that is going to be a big growth driver down the road for Google. The question with Google is, are they going to get cannibalized on Google search with something like ChatGPT or another AI product? We'll have to wait and see there. But again, Meta can be a little volatile, but I think these companies are still in good shape. I really like what Meta's doing when it comes to utilizing AI in their suite of products. They have so many eyeballs. They're going to use AI to improve their products and charge a premium for their products and make their advertising more efficient. All these companies are going to use AI to target ads better so they can charge more for their ads. And make them more efficient and make companies want to advertise more. But again, you're going to want to advertise where people are looking. So I think these companies are just fine. They're going to have ebbs and flows when it comes to quarter over quarter stuff, but they're doing really, really good here. This is another interesting chart. Here is the streaming breakdown when it comes to the US. So streaming time at the bottom. YouTube currently is around 10%. Netflix is around 8%. You got Hulu at 3%, Amazon Prime at 2.8, and then Disney at 1.7, and then looks like probably cable or everything else at 13%. So pretty steady. I'm surprised. I'm assuming the other is going to be other streaming, not just cable, because for a while here it was these guys and no one else. There's so many other streaming competitions that the other are starting to grow. But again, YouTube still the dominant player, and Netflix. I think those two are really, really going to continue to kill it. If you watch the Tom Brady roast, that got me super bullish on Netflix, because how many more live events can they do? But I mean, who says Amazon couldn't do a roast of Elon Musk? They could. Or a roast of Bezos. So here's Amazon Web Service. Again, just phenomenal chart. Growing, growing, growing. And what are we seeing accelerate down here? The operating income. Profitability, baby. Amazon. Free cash flow coming your way. So there's 1,000 other charts I could roll through here, but we're going to cut it there. Thoughts on quarter one. Cloud and AI build is still just starting. We got a long way to go. AI is not bringing revenue necessarily, but it's improving their productivity and the software spend. So if you're Microsoft, you're going to improve your Office product and you're going to charge more for the AI-enabled product, as I mentioned earlier. So all these companies are going to use AI to make their products more efficient, more fancy, and they're going to charge a premium for it. The big are just getting bigger. These big tech companies are so fit, and they're going to continue to cut costs and bring in more cash and then reinvest that cash, repurchase shares, all the right things to pump the stock up. So these big tech companies, you want to own them, and you want to own them for the long term. Not financial advice, do your own research, blah, blah, blah. Travel, leisure is strong, but the consumer is trading off. So as I mentioned, you may book the Airbnb and book the trip, but you're going to cut costs somewhere else. So again, Starbucks, they got hammered. You're seeing McDonald's saying, hey, we're selling less product, but we're increasing revenue. I think these companies have ran out of pricing power in the short term. $39 for a double steak bowl at Chipotle here in California. $39 for a bowl at Chipotle. That's unbelievable. No one's going to continue to pay those prices if they keep going up. So you're seeing people say, all right, if it's $39 for Chipotle, instead of going there every week, I'm going to go there once a month. That's what you're going to start to see with these companies. So when I say they've ran out of pricing power, I think instead of raising, they're realizing, okay, I can't go much higher because we're already losing sales. So we're going to keep it here or maybe pull back a little bit. They're not going to cut prices drastically unless their sales really fall off a cliff. And that'll typically happen if we really get a recession. But there's a lot of buybacks, a lot of investment, and I think that's going to keep the market stable. These companies wouldn't be throwing money out in dividends and throwing money in repurchasing stock and throwing money into NVDA chips if they really saw a lot of weakness in the economy. So now that is for the big tech companies. If you're a low margin company, you're going to have to keep getting fit. If you're Airbus and Boeing and Tesla, you're going to have to cut the fat, become a lot more efficient, and you're going to use robotics and AI to make yourself more lean because you're selling less product. So you have a tale of two economies. You've got the digital economy and the real economy, and they're kind of going like this. But as we really start to get back into a boom cycle and the money printer starts going, you're going to start to see those low margin companies go crazy again. But with the high interest rates, it's hard to sell planes, it's hard to sell cars because those things need to be financed. So I love the volatility on the earnings. I love the potential opportunities to buy these stocks when they get hammered. As I said earlier, I bought some Shopify, I bought some Palantir, I bought some Google, I'm looking at Meta, I'm looking at Lululemon, I'm looking at PayPal, AMD, SoFi, some of these stocks that are getting pushed down. But again, with volatility so low, there's no reason to go buy a bunch of stocks. I'm waiting for the market to really be shuffled around when the volatility goes back up. But that's all I got for you. Quarter one earnings update. I hope this helps. Long video. Thanks for sticking through it. If you like this video, hit the like button. Send it to someone that you love. That's all I got. Peace out.